Closing the loop, why the end of management is just as important as the beginning. As we conclude Chapter 3, we arrive at the final and often most overlooked phase of property management: termination and final accounting. Many brokers focus heavily on onboarding properties and managing ongoing operations, but the true test of compliance often comes at the end of the relationship. The Broker Audit Declaration, BAD, evaluates not only how funds are handled during management, but also how they are finalized when the agreement ends. This is where disputes, complaints, and audits frequently originate. Under ARS, paragraph 32-2151, and ARS, paragraph 32-2151.01, brokers must account for all client funds from beginning to end. This includes properly closing out accounts, dispersing remaining funds, and providing clear documentation. Failure to do so can result in serious violations and potential disciplinary action under ARS, paragraph 32-153. This section ties together everything from sections 3.1 through 3.3, tracking activity, managing funds, and following timelines, all culminating in proper final accounting. Termination of property management agreements, ending the relationship properly. Property management agreements do not last forever. They may terminate due to expiration, mutual agreement, sale of the property, or cancellation by either party. Regardless of the reason, the termination process must be handled carefully and professionally. A proper termination should include written notice of termination, clear identification of the effective date, instructions for final accounting and fund disbursement, transfer of records, keys, and property information. For example, a property owner in Chandler decides to terminate their agreement with a brokerage. The broker must document the termination, confirm the final management date, and begin the process of closing out the financial records. A common mistake occurs when brokers treat termination informally, through verbal communication or incomplete documentation. This creates confusion and increases the likelihood of disputes. This ties directly into fiduciary duty principles. Even after the relationship ends, the broker remains responsible for properly handling the client's funds and records. Final accounting requirements. Every dollar must be accounted for. Final accounting is one of the most critical steps in the property management process. It requires the broker to provide a complete and accurate summary of all financial activity related to the property. A proper final accounting should include all funds received during the management period, all expenses paid, all fees charged, remaining balances to be dispersed. For example, a Phoenix brokerage terminating management of a rental property must provide the owner with a detailed statement showing rent collected, maintenance expenses, management fees, any remaining funds. This final accounting must align with trust account records, including journals and ledgers. Any discrepancies can lead to complaints or audits. Under ARS, paragraph 32-2151.01, brokers are required to maintain accurate records, and final accounting is the ultimate demonstration of that requirement. A failure to provide clear and accurate final accounting is one of the fastest ways to trigger an ADRI investigation. Owner reporting obligations. Transparency builds protection. Throughout the management relationship, and especially at termination, brokers must maintain transparency with property owners. This includes providing regular statements and final reports that clearly outline financial activity. Owner reporting should be timely, accurate, easy to understand, supported by documentation. For example, a Scottsdale brokerage provides monthly owner statements detailing income, expenses, and net disbursements. When the management agreement ends, the final statement should mirror this format, ensuring consistency and clarity. A lack of reporting is a major risk factor. Owners who do not understand how their money has been handled are more likely to file complaints. This ties back to Jennings v. Lee, reinforcing the broker's duty to act in the client's best interest and maintain full transparency. Clear reporting is one of the most effective ways to fulfill that duty. Case study. Audit failure scenarios. To understand the importance of final accounting, let's look at a real-world style scenario. A brokerage in Mesa manages 75 rental properties. One owner terminates their agreement after a dispute over maintenance expenses. The broker provides a partial accounting but fails to include several transactions and does not clearly document the remaining balance. The owner files a complaint with ADRE. During the audit, ADRE discovers incomplete final accounting records, missing documentation for certain expenses, discrepancies between trust account records and owner statements. Even if the broker did not intentionally mishandle funds, the lack of documentation creates a compliance violation. Under ARS, paragraph 32-2153, the broker may face disciplinary action for failure to properly account for client funds. Now compare that to a compliance scenario. A brokerage in Gilbert terminates a management agreement and provides a detailed final accounting, including all receipts, expenses, and disbursements. The records match the trust account exactly, and the broker documents the transfer of all funds and records to the owner. In this case, even if a dispute arises, the broker is protected by clear documentation. The difference is not the outcome, it is the process. Bringing it all together, final accounting is where compliance is proven. It is the final step in the life cycle of property management, and it reflects everything that has been done throughout the relationship. A brokerage that maintains accurate records, follows proper timelines, and provides clear reporting will be well positioned to pass an audit and avoid disputes. A brokerage that does not will face significant risk. Chapter 3 has shown us that property management is not just about managing properties. It is about managing risk, money, and relationships at a high level. As we move into Chapter 4, we will shift our focus to transaction file management and documentation standards, another key area of ADRI audits. Online discussion. Why is final accounting critical at the termination of a property management agreement? Answer. Final accounting ensures that all funds are properly accounted for and documented, protecting both the client and the broker from disputes and compliance issues. What risks arise when termination of a management agreement is handled informally? Answer. Informal termination can lead to misunderstandings, missing documentation, and disputes over funds, increasing the likelihood of complaints and audits. How does proper owner reporting reduce audit risk? Answer. Clear and consistent reporting provides transparency, builds trust with clients, and creates documentation that can be used to demonstrate compliance during an audit.